Welcome to another Founder Wisdom Pod. We have Anmol Singh with us today. He's a stock market trader and investor based out in New York/Florida. He's the author of a book prepping for success. He's been featured on Forbes, Fox, ABC, and more. His company is called LiveTraders, so he's been at it for almost a decade now. Anmol, welcome to the pod. Tell us a bit more about yourself and what you're up to nowadays.
No, thanks for having me. Looking forward to chatting with you. So yeah, I just moved from New York City to Florida. That's my new home now, at least for the next few years. And what I've been working on is mostly the markets. I mean, this markets have been really heating up. There's a lot going on in the world with the whole economic news, the tariffs. The stock market's been on fire. And so today I was just trading, Tesla. It's been a rocket ship stock today.
Why Tesla? And is the market like always hot, or is sometimes the market more calm and less intriguing in terms of trading?
Yeah, I think last few months the markets were kind of like quiet. They were just quietly going up very smoothly. But like today, we had the news Elon Musk bought $1 billion of his own stock. So the stock went from $370 to like $430 today. It's a big move in just one day. So the markets have been heating up, and I think it's going to get more and more interesting as we go along. And that means a lot even for businesses to how do you position yourselves, not just if you're a trader or an investor, but how do you position your investments? How do you position your portfolio? And if you are a business owner, how are you positioning your company and yourself within this new environment with AI and everything else that is going on in the world?
And buying your own stock, like, isn't this like silly financial engineering? I'm just not sure why the market reacts and creates billions of value if just someone bought their own stock. Like I mean, this looks like a very old trick out of the bag. But what do you think about that? Do you think like the market really reflects the values of company, or is it a couple of old bros at the top just being like, oh, he bought his value, now let's buy some and let's just create money out of thin air?
Yeah, and I think with when it comes to Tesla specifically, there's like a lot of things going on in terms of like robotics, the Optimus robot, and also the robo taxis that they're launching, the full self driving. So, but the price of the stock never went up despite all of that news, right? It didn't go up. And I think that was because people weren't sure, as Elon, as the CEO, is he going to stick around? Is he fully there? He's so like, he's like sort of his mind is diverted. He's got a lot of distractions with politics, with this, that, X. There's so much going on that people weren't confident that he is in it, right? He's going to be there for the long haul for Tesla. So when he buys $1 billion, that shows the investors, okay, he's there. He just put his own money into the stock, and he got a new, pay increase as well because he never got paid for his last money. But instead of taking the money out, he's putting it back in the company. So it shows the confidence in investors. And previously, when he did that in the past, where he put all his money in Tesla, then put all the money in SpaceX, it's always worked out. So the market kind of looks at that and says, okay, if he's that confident, if he's believing in that, and so are we. And there's a lot of people who bet against the company too, right? They shorted the stock, and now they wake up this morning, they have a massive loss. So they have to get out of the shorts by buying more shares. And that creates like further fuel into the fire to push the stock higher.
Interesting. And LiveTraders, what percentage of your money is it responsible via trading? Do you still make most of your income through trading or by teaching people how to trade?
Yeah, so I would say it's about like a 70-30, right? 70% from my own trading and then 30% from my coaching and training business. It used to be more. It used to be like 60-40 before. But nowadays I trade much bigger, and then the coaching business is, pretty much stable as it was. So there hasn't been much increase in that. So yeah, it's about a 70-30. 70% of what I get is from my actual trading myself, and then 30% is for helping people achieve their goals.
And what's your background? How did you get to trading? Did you had some capital to invest from the start, or did you hustle your way through?
So I work for a prop firm. So a prop firm is where there's a company has like hundreds of traders, right? They train them, they coach them, and then they give the trader their money to trade. So imagine just like an office space, there's 100 of us, right? And we're all just trading the company's money. And then the company takes a percentage of everything you make for them. So if I made, let's say, $1 million for the company, I'll probably get only 700,000. Company's going to take 30% of that. So I traded for many different companies first until I traded for them for about 5 years. And then 5 years into the career, that's when I went out on my own and I started my own company.
Interesting. And you also had a book. Was that to get like more coaching clients? Why did you decide to write a book?
Yeah, so I have a three books out here now. First one was Prepping for Success: 10 Keys for Making It in Life. And that book was is just a personal development book. It doesn't talk anything about trading. It's not about the markets. It's not about business. It's literally about you and your mindset and how you're going to achieve your goals. Right. And I wrote that originally for myself on things that I need to do in my own life to achieve my own goals. I spent a lot of money, hiring coaches and mentors and going paying like billionaires, like donating to their charity just so I can have dinner with them because I was always trying to learn and develop myself. But then I realized not everybody else has that amount of money or time to invest in themselves to learn all of these things the hard way that I did. So it was basically a book that I wish somebody gave me 15, 20 years ago. Would have made life a whole lot easier. So that was my motivation for writing the first one. The second one that I just came out with in June is called Mastering the Trader Within. That's a trading psychology book. And I wrote that to help traders because one of the biggest things in trading is not your strategy. Because let's just be honest, nobody knows where a stock is going to go. Nobody has any idea. We're all just making predictions. We're all just making sort of educated decisions, right? Now, with that, what happens is the difference between people who succeed in the stock market and don't is all comes down to right here, which is the person within, the mastering the trader within. Because I can tell you, hey, buy the stock, hold it till it goes to 400, and then maybe you bought it at 200, it goes to 250, and now you want to take your profit and you sell it, so you never hold on for the big gain. Or if you buy a stock at, let's say, $200, I say, hey, if it goes below 190, just take a loss and walk away, and you keep holding. Maybe it'll come back up. Let me buy more. Right. So those kind of things is what destroys a trader or investor's account, is your own emotions and your psychology. So that was my motivation in this book, to give people what the real difference maker is to controlling yourself. Otherwise, you're going to end up becoming a gambler. So that was kind of my motivation for writing those two books.
And would you say it's like 60% plus mindset, like in terms of trading? What, or would you say it's also about doing your actual research, right? Because when you get stressed, you just make bad moves, right? Like it short circuits your thinking, your rational brain, right? So what percentage is actually mindset?
I would say like 95% mindset, because what I've realized, because being even in the coaching business for about like 10 years now, I've seen people come and go. It's like a revolving door, right? New people come on a trade, they learn, oh, it's very tough, and then they leave, and then new people come in. It's like a revolving door. So the people who've stuck around and people who've gotten the results, they've mastered themselves, because a strategy is only as good as your ability to follow it. I could give you the world's best strategy that is going to work every single month, but yet some people are going to do it, some people are not going to do it, right? So the difference was who can be disciplined enough to just do it. So I think it's 95-5, because you know somebody, let's say, has a perfect mindset. I give him a okay strategy, he's going to figure it out, he's going to make it work for himself. Where somebody with a poor mindset, I give him the world's best strategy, he's still not going to be able to do it. So I think that's why I say 95-5. Yes, you still have to do your research. Yes, you still have to know the charts. You still have to know the patterns. You still have to have the data, right? Like, we don't trade without data. I need to know, if I took this exact same trade setup last 1,000 times, what was the win-loss ratio? What's the average winner, average loser? I need to know all those statistics before I make a decision.
Right. And when it comes to mindset, what are your best tips to keep your shit together once there's 5, 6, 7 figures on the line?
Yeah, I think the biggest tip is to have a plan, right? Like, you need to know when you're going to buy the stock and when are you going to sell it if you're right. What's your target? Most people never have a target. Like, when are you going to sell it? When are you going to get out? When are you going to take profit? And the most important thing, when are you going to get out if you're wrong? Most people never think about that. They just buy the stock and, oh, I'm buying it here, I'm going to sell it there. Okay, but what if it just keeps going down? What are you going to do then? So you need to know, when are you going to get out if you're wrong. That's the most important thing. And then sticking to that, and then building a checklist, right? No matter how long a pilot has been flying planes, he could be an experienced veteran pilot, he could be flying for 10 plus 20 plus years, but yet every single time he gets on the plane, he's going to go through the checklist. Okay, this is my entry. Okay, here's what I'm going to exit if I'm wrong. Here's my target price, right? How many shares am I going to buy? So traders need to also go through the checklist.
And aren't most people degenerate gamblers, especially in the crypto community? Like, that's why they do it. And to them, following a plan is pretty much like hell. they would rather like lose a fortune than rather like losing tons of money. They just want the thrill of gambling and winning like pretty much like 1 to 5% of the time.
100%. Yeah, they're not professionals, right? They don't want to learn. They don't want to. They want the thrill. They want the adrenaline. They want the adrenaline. They want the bragging rights. They want to tell their friends, "Look at how much I made," right? So they're doing it for the thrill. They're doing it for the adrenaline. They're not doing it as a professional career. A professional trading is really boring. Let me tell you that. Good like excitement. That's when you know you're not trading the right way. Good trading should be just pushing the buttons on a spreadsheet. Or you're just following a model, right? That's how boring it needs to be if you're doing it the right way. And most crypto or like degenerates or all the people, that you see on Reddit or X or whatever hanging out, they just want to be right. They don't want to do it the right way. They want to be right, which is a very big difference. Doing it the right way versus you ego wanting to be right, two very different things. And most of those traders never make it long term. They might have one big hit, they got lucky, right? And then that's it, the one hit wonders.
And trading, in your opinion, is it still very profitable, or is there like some niches like crypto, for example, that are way more profitable than some others via some other activities, like they could start a business, for example, and so forth? So, is it still something that you can make money of, or is it like overly competitive?
No, I think it's more lucrative now than it's ever been before. Because when I started to trade, we didn't have phone apps. We didn't have, you can do it on your phone, you can do it on your iPad. We didn't have softwares like these. We had these outdated softwares that you had to first connect to the servers, right? Then you'd have to place the orders and you have to pay commissions. Like people don't have to pay commissions these days. Most of the brokers are free to buy and sell. Back in the day, we'd be paying $20, $10 per trade. So even if you're break even, you're still losing because you got to pay commissions. And we had to pay like $300-$400 a month in platform fees, which are now free. So it's now more lucrative than ever before, in my opinion. And I think it's easier now than it's ever been before to make money because back in the day, people who were in the stock market were all pretty much experienced, right? They were less gamblers. Now there's like Reddit, there's X, there's 90% of the people have no idea what they're doing. So I find it much easier now than ever before because it's like you're competing against people who have no idea how this market works. They're just trading based on they read an article, they read some news, they want to buy it, and they're trading on that. So it's very easy. We actually have a saying in our community. We call it "feed the ducks," which is when the ducks are quacking, you feed the ducks. When everybody else wants to buy the stock, we sell it to them. When nobody else wants to buy it, then we're kind of buying it from them. And then it starts hitting the news and everybody wants to buy, then we sell it to them. So we call it feed the ducks in the markets. And we consider like these online people like, the ducks are quacking, we feed the ducks.
And is this market more brutal than the entrepreneurship market? It seems like a you lose, I win type of market. Is it the same way when it comes to launching a business, or is it less brutal, less competitive as a market?
Great question. I think both more brutal and less brutal at the same time. So more in terms of in a business, you have a long enough runway. So like you have a month, 3 months, 6 months, 12 months to like make the business work, right, and still be profitable. In trading, you're getting the feedback like in real time, right? So like you don't have to wait till the end of the month to see how the business did. You're gonna find out like instantly, every second. You're gonna find out how much you're up or down. So it's more brutal in that way that the results happen faster. But it's also less brutal because it's me and the computer. There's no employees. There's no like, lawyers I need. There's no like manager I need or employees I need or colleagues that I need. So there's no office politics. There's no like getting stuck in traffic going to work every day. There's none of that. There's no extra filings or paperwork I have to do or vendors or suppliers to contact. So it's less brutal in that way that it's just me and the computer. There's nobody else here, right? So that's the good part about it. But the hard part is like I can see how much I'm up or down every second. Whereas a business owner, can just kind of take a step back and look at the business from a big picture. So they're both good and bad. I think people should do both. So that's why my trading is my trading, and then my coaching and my advising people is kind of my business side of things. And when you combine both, I think that's when you really achieve your full potential.
Yeah, that's a good point. I think, to go into trading, maybe like a bit more like the sprinting mentality, right? Like quick investment, clear scoreboard. Okay, I win or I don't. Entrepreneurship is so it's like muddy waters, right? You're not really knowing if the needle move forward. You need to be good at various things. You don't have a clear scoreboard until you actually make it, right? That's
Mhm.
why like KPIs are so important. I use ChatGPT a lot nowadays to keep scoring my business, but it's intriguing. And why not start an actual trading desk? You know, like why not sell the picks to the miners? Wouldn't that be a more intriguing business, like a platform? You building the actual highway instead of being a car on the highway?
Um, yes and no, because yes, if I do that, then well, now I'm entering into business. Now I need employees. Now I need colleagues. Now I need an office. Now I need, compliance with the SEC, FINRA, legal stuff. Now, basically, I just bought myself a job. Right? Like right now, I'm trading on my computer. I'm talking to you. Like I'm done trading. I trade from 9 to 12 every day. So I'm done trading. My day's over. Like I'm going to have a chat with you. I got a couple more Zoom calls, and then I'm done. Right? There's nobody, no responsibilities anymore. Now, if I do that, sure, there's potential to make more money in that. There's probably more lucrative. But then I also just bought myself a job, and I got to be here looking at employees and stuff. So it really depends. Is reverse engineering your life? Right? Which is what's the lifestyle you want? I think a lot of people look at how can I make more money? I look at it like, okay, how can I create the lifestyle that I want? So, and if my income level gives me that lifestyle, then that's it. I don't need to look for more. It's kind of my opportunity. Like, because I could make more trading right now. All I got to do is just buy more shares on all the trades that I do. I can just start making more. So that's how I look at it in businesses now. Is if I start another business that let's say makes me $5 million more per year, but I could just, instead of trading 1,000 shares, I could just go to 2,000 shares. Now I just make double the amount that I made last year. So I think that for me is more easier. It's more scalable because the scalability is literally how much you can handle psychologically. That's it. So I would rather scale the trading than start something new. Yeah, but it's a great question.
And how much can you handle psychologically? Can you actually increase your stress levels, your risk level? Can you do that in a scalable way, or is it like a hard limit?
Uh, you can scale it as much as you want. It really comes down to personal preference. Like I have students of mine that have scaled past me, right? Because I'm pretty happy. I'm like, okay, this gives me the lifestyle that I want. I'm pretty content. I'm satisfied. But some of my students, they're like, I want to do this. I want to do it bigger. They took it to a different level, like 3 times the level that I'm at already. So it really depends. Some people have more risk tolerance. Some people don't. Some people are more thrill seeking. Some are don't. Some of the students that are like late 20s, they take more risk. Some people who are married, they got kids, they're 40s, they take less risk. So really, it's all in your mind. That's why I say psychology is 95.5. Is scalability is really up to you. I always tell people scale really slowly. Take your time, right? Don't raise your risk every day or every week. Trade the whole year. See how you did. If you were really consistent, next year trade a little bit more. Trade on that a little bit more, and just keep scaling up until you reach a point where you're like, okay, this is it. This is where I'm satisfied. This is where I'm happy. If you start noticing you are getting really excited, the adrenaline's kicking up, you're like, ooh, what's going to happen now? Maybe you're risking too much. Maybe cut it back a little bit. You should trade where your emotions can be stable.
Yeah, is it like not, well, I mean, the way I would phrase it and the way I've been taking risk is like not giving a fuck really and just like viewing 5 or 6 or 7 figures through different lens. If it's lost, it's lost, you know? It's
Mhm.
just money, but also I may hit the jackpot maybe like 1 to 5% of the time. In business, you have a bit more control, especially once you've been like a decade as a founder, but it's just a psychological perception, right? It's like what we've been taught like from childhood is like, oh, $1,000 a lot of money. Oh, $10,000 is not a lot of money for some people, and for some people out there, 100K is pocket change, you know? So
Mhm.
I guess it's really the perception about that. I guess it's having your primordial needs taken care of and your baseline lifestyle, right? And not really struggling. It's also like the people that are around you, like you mentioned. Maybe you have a spouse that has money traumas and
Mhm.
have a way smaller baseline than you do, right? It's all of these factors. It's all these perception that may generate cortisol at some point or adrenaline, like you mentioned. And at some point, it's just about, yeah, just not giving a shit. That's how I would describe it.
Yeah, and I think you have to get to that point where you are unemotional. I actually wrote about this in my book, is that you should never be emotionally invested in any trade. If you are, you're doing it the right way. If you're like, but I love this stock, it's going to be the next thing. Well, now you're emotional instantly, because you should have no relationship to the stock, right? I call it trade it, don't date it, right? Like, don't date it. Like, I have zero emotional attachment. I could love a stock today. I could be buying it. Tomorrow, I could just flip it and want to sell it. Maybe I want to short it tomorrow. Like, I have zero emotional attachment to a company or a stock. It's just I buy and sell all day because that's the business that I'm in. I'm in the trading business. I'm not in the buy and hope business, right? Just buy and hope this goes up. That's hope. Hope is not a strategy. Warren Buffett talks about buy and hold. What most people do is buy and hope. So you should be emotionally not tied to the outcome. It's just a trade. I look at it like a sample size. If I take 100 trades, I'm probably going to win 60 of them, probably going to lose 40 of them. So if I lose, I just look, oh, -1. It's part of the 40 that I was going to lose anyway. So I look at it like that.
And you're trading today, do you always trade for 3 hours? Were there more research that went into this 3 hours? Let's say 3 to 4 hours of research for 3 hours of trading, and explain like your thesis behind the Tesla stock today, like what went into this, and yeah, how much did you invested, how much you're hoping to lose, like your full scope strategy of today.
So to answer your first question, like, yes. So when I started trading, I used to trade pretty much all day, market open till market close. And then, I maintain a track record, a spreadsheet of all the trades that I've ever taken. So when you go into which this is really important. That's why Facebook is the most, popular or one of the most valuable companies, is because they have the most data on everybody. So I have data on all my trades. So I looked at my data and I was like, wow, I traded all the way till 4 o'clock, but 90% of the money that I'm making is coming from 9 till 12. So then why am I trading all day? So oftentimes I noticed I would make money early in the day, and then by the end of the day, I gave it back. Right? I made money in the morning, and in the afternoon, I lost some money, and now I'm break even, or now I'm losing money. So I noticed that. So that's why I said, you know what? If I'm making most of my money in the morning, I'm just going to not trade the rest of the day, 9 to 12. And then I stopped. And then that's how we look at data to make better decisions. So that was the first question. The second about Tesla, yeah, the thesis was pretty simple. In terms of technicals, which is what we look at charts, it had a classical breakout pattern. And I posted on my Twitter 2 weeks ago. I said, hey, September, watch it. Tesla will break out. And Tesla was at $300 a share. And today it all went to like $430. So that breakout happened. It was just a classical technical chart pattern that I had full confidence in. In fact, I even tweeted it early in August. I said, Tesla will be over $400 by next month. And it was not, it might be, it will be. So that was a classic technical pattern, combined with the fact that I can see how all this negativity that was happening with the elections, all that was suppressing the stock down. Now that that's over, the stock's going to go. And that's what we saw today.
So, and was that like a 10, 20, 30K trade? Like, give us an idea of what you could expect out of today's trade.
So for me personally, it was a nice hit. I'm still in it, so I'm not out yet. So I wouldn't be able to tell you how much I made or lost, because I'm still holding it. And yeah, but I think if you bought 1,000 shares of that, let's say you bought 1,000 shares at $200 or $300. I mean, you could do the math. It's a 6-figure trade right there.
Okay, and you could expect like 25K out of this, 30K, if everything goes well. And would you exit in a couple of days? What's the window?
Much more than that, but I'm not exiting right now. I'm looking for $500 as my target price. So if it goes to 500, I'm probably gonna sell half, and then or half, or maybe a little bit more than half, and I'm still gonna hold some, because yeah, this thing could be much higher.
Interesting. Do you leverage like AI tools like deep research before you make a trade, like social sentiment and all of that? Do you have like a precise machine that you build to execute trades scientifically and in a way that your competitors don't?
Yeah, I don't use any of those tools. I don't believe trading can ever be a science. Trading is an art. It can never be a science, because the moment it becomes a science, then the softwares and black boxes build around it. And then when everybody starts using it, it stops working. So then people have to find something new, because the markets are dynamic. So I don't think markets can ever be fully scientific. It's more art than science. I don't really believe in using those tools, because those tools are created on an outdated language model that they studied. So it's just going to give you random answers. And sometimes it works, and then we're like, look, but AI said it's going to work, and it worked. It's selection bias. It's a cognitive human biases, where we always remember the stuff that worked. We forget the 100 times that it didn't work. So I don't think it's going to be useful. We have our own tools. It's called Trader Flow, which is you still have to trade yourself, but the Trader Flow helps you manage those trades. Like it'll exit for you, it'll do all the other things for you, but you still have to enter yourself. So yeah, I don't think it will ever be a science because its markets are not scientific. It's driven on human emotions of fear and greed, and they're always going to exist.
Interesting. So you aggregate a bunch of data with your brain and then you let the gut decide, sort of. Where can people find out more about you and your company, Anmol?
Yeah, they can go to livetraders.com. If they're interested in trading, they can learn more about it there at livetraders.com. Or you could go to my personal website, which is my name, anmol.net. And there you can learn more about what I do. And I would love to give your listeners a free copy of my book. They can just go to go.unmol.net and they could just cover shipping wherever you are in the world. Would send you a free copy.
That was Anmol and Charles.